All right, and welcome. Here we have a case study on DXY. This started October 1st, 2021. And I'm developing student. These are just my interpretations on price and then shout out to ICT. So let's get straight into it. We're going to be discussing this fractal and price over here. But as you can see right now, what is the current order flow? We're clearly bullish. All these down close candles are getting respected. And we are continuing to making new highs and new highs and new highs. And drawing liquidity are this high and then this high right there. So basically, this is just zoomed in. What is price doing right now? So right now, price has delivered sell side in this area right here. We have delivered sell side here, and then we have come up and we have delivered buy side right here. And right here, we have a big expansion candle higher, and we have this is inefficient because we have only delivered buy side. If you don't even look at these candles right here, this is just a big green candle right here. And the last time that we've delivered sell side was at this candle right here. The market's going to come back lower to offer sell side to this area, and if we do want to go higher, we are going to react off of, or we are going to respect this down close candle or this wick right here. And that's pretty much what we end up doing. That's your context on the daily. We also have daily imbalance right here, and then we have that kind of breaker order block fair value area. So let's get into the 1 hour chart, and this is the 1 hour chart done before I'm writing my annotations. So if you want to like pause your video, or if you want to go into FX replay and do it by yourself, I would recommend doing that just so you can just see the model, because it was a very nice fractal in price. Right here is the market maker buy model, and then here is what I had written up. Right here you have your old area of selling, old selling, and then we have your smart money reversal, and then we have new accumulation, new accumulation, new accumulation, new accumulation right within here. So let's break this down a little bit, and what type of PD arrays, or what were the important areas of price. And these are kind of my important areas of price. Right here you have that 1 hour breaker. We get a market structure shift here, which I don't have that written in, but you have that like very pretty much break a structure right there, and then we come back down, return to that breaker, turn to this order block, and then we have this order block right here, and then we have this order block right here. We have a fair value gap. This ends up being your silver bullet right to buy side. And what I want to note is that the down close candles throughout this whole leg of price are all meaty down close candles. They're all big beefy down close candles. They're all big beefy down close candles. And the reason why this one did not hold was because this was right before NFP. This was NFP right here, which I want to note. So this was kind of NFP week. So the reason why this one isn't going to hold, because one, it's right above this bearish, this bullish breaker right here. It's right above this breaker. So price isn't going to come back here to then move higher. We're going to return to this breaker to offer a fair value to the market, like the same example as that example I had on the daily chart. Right here, what do we have? Sell side delivery right here within this order block candle. Then we have buy side delivery within here. So the market's going to reprice lower back to this area of fair value to give sellers a fair chance in the market. That's what we end up doing right at NFP, and then we have displacement higher, and then we end up finishing this market maker buy model with that silver bullet right there. And then I want to have these price swings right here, or swing grades right here. And as we can see, around 50%, what ends up happening? We end up having a stop hunt. You can anticipate some form of a stop hunt around 50%, 25%. I know it's not exactly, well, like, technically this is 75%, and this should be 25%. You have silver bullet, and then right here at 25%, what do we have? We have your low risk entry right there in terms of this 1 hour model. And again, we're going to dive into this all, and I'm going to dive into the smart money reversal first and foremost. So right here, this is when we can see the algorithm changes the state of delivery right here on this down close candle, and technically this is your change in state of delivery. Right here, you have a short-term low right here, intermediate-term low here, and then now you have another short-term low that gets confirmed here. The algorithm changes state of delivery right on that, right as soon as we close above this. That's when we change our state of delivery. We come back down, and that would be the early low risk entry of this model. Right here, market structure shift, pull back, fair value gap, 2022 model. And now we have this fractal in price here, to where this is after we've had that smart money reversal. This is then when you know that, hey, prices probably changes the state of delivery, and now we're likely going to see buy side delivery here. That's what ends up happening. We end up having a double purge where we take both buy stops first, then we take sell stops first, and then we head higher. And then look at where we head back to this order block right here, and then we reprice right to this 1 hour fair value gap low to then head higher. So right now we have purged with buy stops, sell stops. We return to an area of fair value again, and now we have displacement higher. We come back down. That becomes a possible entry. And what does now this become? What is this area and price now become? This now becomes a market maker model. So you have your smart money reversal right here, like it was. Then you have your area of accumulation, accumulation, accumulation. I don't like looking at terms of low risk entry. I like looking at market maker models in terms of accumulation or distribution. Like I don't care to classify it as a low risk entry, or because then you're gonna tend to get like tripped up with like, oh, is this a low risk entry or what is the low risk entry? I don't think it really matters that much. Is what is the area of accumulation and what are the areas of distribution? And notice how on the standard deviation, you can use standard deviation projections on retracements or manipulation legs. That's kind of what I do. That's how I use my standard deviation projections. And notice where 2.5 to -2 2.5 lines up with right there, possible reversal area. Then we come back down, and where does price reaccumulate right within? If you map that out in time, it comes right back down to that fair value gap to offer your silver bullet within inside of this fractal. And we can add on to that by using swing grades, to tell us what are we possibly going to do. Right at 50%, we have a stop hunt, and then right at 75%, we have a silver bullet. Notice how these two things, where do I have it? These two, this is the 1 hour model. Notice how similar this looks to this. They look very similar. This is a market maker model inside of a market maker model. Market maker model inside of market maker model. That's all this is. And it's just areas of where are we accumulating and where are we distributing. Right here we have this original consolidation. Then we have an area of distribution. Technically this could be distribution. To then have a smart money reversal. Price changes its state of delivery at a higher time frame PD array. You want me? I can go back all the way to this. This old high now becomes a PD array because of the delivery of price. This is the PD array. We also are off of a fair value gap right here, a daily fair value gap. And then we have our smart money reversal, and then we have area of accumulation. This, we're enticing buyers within the market, we're enticing sellers in the market, and then we get that. So I also want to mark out this standard deviation, which this is the last manipulation leg and price. And look at where -4 lines up. -4 lines up right with where we ultimately end up stopping here, where we ultimately end up offering sell side and then having that larger time frame stop hunt. So right here, -4 maps out, terminus is hit. We have taken buy side liquidity as well, and then price changes its state of delivery, and then we start offering sell side. I didn't really mark out, because I know this technically is a market maker sell model, technically if you think about it, but I'm not really going to go into that because when we're bullish, we expect market maker buy models to complete, and we don't expect market maker sell models to complete. So as you see, this is a market maker sell model that just never completes. So right here, we're going to go over, this is the NFP news release. This is this fractal price. This is after we've had that higher time frame stop hunt. That's this right here. This is this area of price right here. Maybe I'll show this a little bit more organized next time, but basically NFP releases in the market. All of this is just manipulation. All of this is just straight manipulation lower to that area of fair value. NFP ends up releasing, and then right here, if you look at the previous slides, this actually is an SMT with Euro USD. We had a SMT right here. Then we have a stop hunt, and then we have displacement higher, pull back to OTE, and then this is a 1 hour fair value gap notated right here. we pull back to that area, and then we offer higher prices. Now, this is this fractal in price. After we continued higher, we pull back to that 1 hour fair value gap. I want to make note of that. And then we come back down to this fair value gap as well, silver bullet. And this right here, this down close candle, this line right here is mean threshold of that. I just noted that because we weren't even able to come down to mean threshold. So that's very bullish. And we're within this imbalance that we're respecting. So right here, we have another area of manipulation. We manipulate below midnight open into that fair value gap, pretty much respect it perfectly, come back down maybe this order block, and then we have an OTE retracement back into this fair value gap after prices changed its stated delivery, come back down into that fair value gap. Notice what time this is occurring at. London makes that low a day, and then we have New York open expansion up to buy side liquidity, expansion up to buy side. And I do want to make note, I'm gonna hold up, I'm gonna pull up FX replay because I thought I had a slide for this, but I guess I didn't. But right here, I wanted to note that this is just AMD. Right here we have accumulation, then we have manipulation, and then we have distribution right here within this model. This is your accumulation, AMD right there. So I want to make note of that. I thought I had a slide of that, but I never did. So now you have all these signatures coming together. You have everything blending together, and everything just beautiful. Like this is as beautiful as it gets. Market maker model. Why is this entry significant? One, we're retracing back down to a 1 hour P to rate. So now not only does this become a market maker buy model, but we're already within that already existing market maker buy model. We're within that silver bullet zone of accumulation within the market maker buy model. This entry becomes very high probable and very fast. We end up just displacing higher with speed right at market open. What happens here? Market opens 9 a.m. Market opens, boom, speed. Right here we come back down, we displace lower to that 1 hour imbalance. Then market changes state of delivery. We come back down, fair value gap, boom, down close candles, now supporting price, or they've always been supporting price. And then boom, we come up to buy side. And then I do want to make note, this 1 hour standard deviation off of this retracement leg. And the reason why I'm using this tie to this low is because this is the first retracement offered in the model. This standard deviation will usually line up. And here we have this retracement. It really starts right here and really ends here. I ignored this wick because it was a stop on it. So this was a manipulation wick. I'm not really going to use that within the standard deviation. And we come back up. Where does negative 2.5 line up with? Right on that high of this model. So now, in terms of this, we now have standard deviation that has just been projected to. This could be a possible area of retracement or reversal. So in terms of if you were looking at this real time, you'd be like, we could possibly reverse here. What are we respecting? What are we disrespecting? And I also want to make note of all of these standard deviations. All these standard deviations, the retracements or stop hunts in price pretty much map to this high, and I thought that was just a cool annotation to add. You have this high to this low at the NFP, and you have this retracement leg here that has a stop hunt, and you have this one right here, but I used the bodies for this one. Perfect right there, all aligning, and these also align with this one. And then you have this one right here as well. You have that retracement leg right here, where negative 2.5 is pretty much the high of that. It doesn't get more precise. So as we see, now this market maker model becomes a little bit clear. This isn't just market maker model, or this isn't just any random price action. This is a market maker model. Right here, smart money reversal, area of accumulation, area of accumulation, area of accumulation, area of accumulation, up to your high time withdrawal and liquidity. Because we know market's just not going to go from sell side to buy side and buy side to sell side and sell side to buy side. We're going to do certain things along the way. We are going to be accumulating and distributing within that fractal price. Right here, we come back down, order block, boom. We discussed that. And now it comes into this nice market maker buy model. And yeah, that was pretty much this case study that I had. I feel like I low-key fumbled on the presentation. I mean, it's a lot better if you go into your charts and do it yourself. I felt like if you can just go into this fractal of price, let me see exactly what day it was, but if you go into FX replay, yeah, it's October 6th, so I might have to change that date. But basically, yeah, October 6th is when this starts. I don't know why I have October 1st. Or, oh, no. It is October 1st, I think. Yeah. Basically, the more that you go over this within your charts, the better that your understanding is going to be. Like, there's only so much that you can get from someone else presenting stuff, and especially if you're presenting it from someone like me. But basically, yeah, this was a very nice model. Pretty much everything that you want to see, everything that you anticipate to see, happened within this market maker model. So yeah, with that being said, I will see you guys in the next case study, and I appreciate you.